Hey there, if you follow us on our website or our YouTube channel, my name is Scott Talley. I'm the owner broker here at 5Market Realty, where we like to produce these monthly market updates about the Athens real estate market. We've been doing it for going since almost 6 years now. And we do this for past clients, people that follow us, and anybody that just wants to keep up with what we're seeing on a monthly basis, changes occurring, or how the market's performing in Athens area real estate, neighboring counties like Oconee. If that interests you, be sure to click subscribe. Now, if you follow us, you might notice right off the bat, this looks a little different than what you might have seen in months past, similar but different. We've been doing this, or I've been doing this since, I guess, March 2020. And it might surprise you to know that I actually put all this together myself. I sourced the information and actually designed the slides. So I try to improve it every once in a while. I'm not a designer, but we try to make it a little cleaner, or I did make it a little cleaner, a little sharper. It'll look a little different, but we're going to get started with the monthly headline, which is basically more listings with less sales in 2026. And are we now finally entering that buyer's market as we're here in July? And then, of course, national information from Keeping Current Matters, where we get information on what's going on across the country. We try to blend that local information along with some national market headlines. So here's our first slide. This will look very familiar, but a little different, hopefully a little more clear. We track four main things. We're looking at the new listings, the days on market, the average home sale price, and of course, the total amount of homes sold in Clarke and Oconee County. We use the Athens MLS, and we've been doing this since really 2020, 2021. And we try to stay consistent. So let's look here at the new listings, which is actually 1,330. And this is year to date when compared to 1,244 last year, representing a 6.5% increase. Days on market year to date, slightly down from 54 to 53, just under 2%. And the average sold price went from 506 to 519, about 2.4%, which is what we're kind of seeing. We're seeing a little bit of price growth in the market, but relatively flat. The biggest thing there is the homes sold. If you follow me here at the bottom of the screen, we're actually down year to date, 4.1 from last year, 2025, and even 902 in 2024. 2024, Athens outperformed the national market. 2025, we were much more in line nationally, but we're actually trailing a little bit behind here locally than we were hoping to last year. Month of June, because there's a lot of slides, I'm not going to spend a lot of time here, but the new listings, the trend is the same, up to 213. That's almost 14%. Days on market in just the month of June actually went down from 49 to 46. Funny how when you separate just out the month, how the numbers can look a little different. That's why we do it. And that's down 6%. And the average home sale price down 7.5% when compared to June last year. And again, those total homes sold, 179 to 169, down 5.5%. And that's one of the things we've been seeing is just not quite the performance in the market. I don't want to give you the impression it's bad. It's just not what we were hoping for. There's still plenty of home selling. We're actually, as a company, 20% ahead of the same time last year, which we're exceeding what I was expecting. But overall, the MLS is not performing as a whole as we would have hoped. This is the total homes on market. I've shown you this slide several times. What I pulled up here is kind of my demarcation line just above 500 active homes for sale. That's not with a contingent contract. That means they're on the market, no contract whatsoever. Right now, last week we were at 517, and then the month before 499, and the month before that 519. So since we're up here, does that mean we're in a buyer's market? Not really. 4 to 6 months is balanced, and we're just at 6 months. And if we started to go 7 or 8 months of stuff like that, it could be. But right now, these homes for sale versus the homes we're taking down are keeping us right about 6 months. And that leads me into the next slide, which is showing you the 6 month bar. And we just got back to it right here in the month of June. We'll see what it looks like in July. You can see we were above that line pretty significantly, but then we came down having a spring where the listings and the sales were correlating to a balanced market. My prediction is we're going to see about that for a little while because the listings we're seeing, they're starting to plateau a little bit. And it really is going to come down to these last 6 months. Do we see a lot of activity or not? And we won't know until we get into it. So this is one of the more important slides I want you to take away from today's market update as we're about halfway through. This is the new listings versus the total sales, first 6 months of the year, going back to 2021. Below my head, I'm going to go ahead and pull this up here too. You can see 82%, 1,482 new listings to 1,221 sales, representing 82% of those new listings were correlating to sales. As you can see, these lines kind of, even though the number went down, they kind of stayed the same, 80%, 74%. It stayed very strong in 2022 and 2023. But let's pull up what's going on right now. Year to date, 2026, it's 58% down from the other end when we were at 82. You can even see that this red bar is starting to grow away from the black bar. And that's one of the things that's sort of indicating Okay, listings are outpacing our sales. We're not having the best 2026 that we thought we could. And a lot of that's due to mortgage rates and international things we can't control. But let's keep going here. We're going to talk about national market news from Keeping Current Matters now. We're about halfway through, so if you want to, please bear with me. Nationwide, 5.8% of all U.S. home listings were taken off the market in April. That's tied with December 2025 for the highest share since March 2020, when the onset of the pandemic ground the housing market to a halt and spooked sellers. Prior to 2020, delistings were never as common as they are now, and that is from Redfin. It's mentioning March 2020. I think you all know that happened then. A lot of people did get a little spooked. Homes did go off the market. People thought there was something different coming than what was actually coming. Real estate was about to go into a boom. It was not going to go the other way. But we're seeing a lot of sellers right now go off the market because they're not getting their price. And if they're not getting their price, they're just not that inclined to move right now. As a matter of fact, this is also from Redfin. This is saying that sellers are choosing to wait. The share of homes that were delisted by metro area. Over here on this area of the slide, opposite from my head, over 10%, almost 12%. That is Atlanta, Georgia, which we're not at the Atlanta market, but we're Athens. We're not far away from it. So a lot that's leading the market right now on houses going off the market. You can see here a lot of these other markets are over 6%. Austin, Texas, right there. New York. We're looking at Minnesota, Philadelphia, Fort Worth, Texas. And then down here, Pittsburgh is still at about 4%. So we're seeing some things in the market where sellers are hoping to plateau those listings by going off the market. But overall, this is what's important to note, that the average active inventory has been rising. Let's pull up a few graphics here. That red line right there, that's COVID. We all know what happened. Look right below my head. Everybody gets nervous. Homes go off the market. The inventory gets really low. People are starting to relocate. Interest rates are low. We have this huge buildup. But what have we been doing since 2023? We have been growing that inventory. And if you look on the other side of that red line, you're going to see that we're getting back to normal. And that's really from someone in my shoes that has done this 20 plus years. That's what I like to see. And I wish we had more transactions, but we'll see how the second half of the year goes. Another thing, want to point out that more homes are selling for less than the list price. So we showed this to you before, but I think setting the expectation as a seller is important. Over here in 2025, 62% of home sales were for less than asking price. Doesn't mean it was tremendously less, but it means it was less. And if you can see on the other slide here, 2018, 2019, 62, 64%. The number's not scary. It's just a little more normal. It's a pre-COVID number. Homes are taking longer to sell across the country. This is a map that we show you a lot, and that is true. And again, we're kind of returning to those norms. As I mentioned before, I don't think we're quite to that buyer's market, but I do think we're still in a balanced market. The inventory and sales correlation over the next several months will tell us. Here in Georgia, we're 54 days. The national average is 52 days. So if you're sitting on the market for 2 months or 3 months, it's not time to hit the panic button. You might want to think about your price, but this is becoming a normal trend we're seeing. It's 55 days in Texas, over 60 in Arizona and New Mexico. Trend seems to be happening in the South and the Sun Belt. Mortgage rates and the expectation. I don't always love doing this because it's trying to predict the future. I mean, this is coming from Freddie Mac, Fannie Mae, Mortgage Bankers Association, Wells Fargo. But overall, as you can see here below my head, they're predicting it to be relatively stable. And we were starting off at a pretty good rate climate. And then we had the Iran war happen. Nobody here can control international politics. And I think we've all learned since 2020, we live in a world that things can change quickly. But right now, the expectation is that it's going to be relatively flat. I'm not sure I 100% agree with that because there is something out there about oil prices, which have been falling. And even though the Fed Reserve may keep the Fed funds rate at a certain thing, we're really more concerned about the 10-year Treasury when it comes to mortgage rates. And this is pointing out the correlation between the 30-year fixed mortgage and oil prices. And you can see oil prices went up in February 2026. What happened to mortgage rates? And then we can see all the craziness through April that we experienced in the news. And now that the prices have come down, we hope they continue to do that or stay down. We can see that mortgage rates have a tendency to follow in that correlation. There's a saying that when rates go up, they take the escalator or the elevator, and when they come down, they take the stairs. So this is typical, and interest rates just getting back down a little bit might increase some buyer demand for the other half of the year that we're now in. And that's showing you right there, right when the Iran war started. And then basically this box right here, as I alluded to, you can see that correlation when the oil started to go down. What did we start to see with the interest rates a little bit? Elevator up, stairs down. So we don't expect the rates to drop so fast, but we do think, or I think there's a chance they could slowly drop down. This is something that was pretty nice that they did there at the Keeping Current Matters team. There's a history of rates reacting to oil shocks. And this is showing you a correlation at three different times in history. This is actually February 99 through August of '01, here to the left. You can see here what happened with oil prices, the green bar being mortgage rates, oil prices being the gray. Same thing in 2005 to 2000, February of 5 to August 2006. That's there in the middle. And then this is 2017 through looks like July 2019. Same thing happened there. So while I think they are probably wise to predict a stable mortgage climate, I just think it's possible that we might see a little improved climate as the year goes on. We've got a few more slides left, and then we'll be ending this up. So more buyers are saying yes than you realize, and that's good news for the rest of 2026. I might have mentioned this before. While overall the MLS is not showing the amount of sales in Clarke and Oconee that we want, I have noticed through 2 quarters that our little company, we're performing about 22% better than the same time last year, which is good news. I wish it was that way for the entire MLS. It's not, but this is showing you that the pending home sales for 2026 are actually above the last 2 years nationally. Everything you're going to see in real estate for a while now is going to be pretty hyper local. Kind of hate the word that I hate the idea I just said hyper, but very localized. And what's going on in Augusta, Georgia, Greenville, South Carolina, Chattanooga, Tennessee, and Athens, Georgia could all be different markets depending. So we've got this new thing here I'm going to try to end on called the executive summary to cover what we talked about and then wrap this thing up. More supply. New listings year to date are up 6.5% to 1,330, and active inventory is holding at about 4.7% above last July. Total homes sold fell 4% to 765, and only 58% of new listings have sold in 2026, which is not something we want to see. It's down from 82%. And then we'll shift here to national trends. Nationally, active inventory has risen for 4 straight years. 5.8% of the listings were delisted in April, tied for the most since March 2020, and a shrinking share of homes are selling above list price. What does all that signify? What I want to say, we're still in a balanced market. Price your house correctly. Listen to your agent, but follow us, because if this inventory keeps up and the sales dwindle like they have a tendency to do in July, August, and September, we might turn this into a little bit more of a buyer's market. And I know that would be welcome news for a lot of people in the market that have been trying to get a home for several years. Instead of doing our group picture, this is just our contact information. Our website is 5mrealty.com. Contact us, info@5mrealty.com, and that's our phone number. We have a team of 20 agents that are working in the Athens area market that are equipped to help you if you're looking to do something now, something in the near future, buying, selling, even investment property. Hope you are having a great summer. Hope you had a good 4th and staying cool. And right here in Athens, Georgia, we're getting a little rain today, but thanks for bearing with me for 13 minutes. Yikes. Sorry to be so long-winded today. Have a good one.